When you open your favorite trade execution tool, you're going to find a series of orders there. And you may be wondering, what exactly are all these for and how can I use them to my advantage? Or you're the type that is trying to learn Forex trading, but you have a job which you still do, and you may not be available all the time to put in your trades or to be in the trade at a particular time. There are some orders that you can use to direct the market to do what exactly you want it to do, even in your absence. That is what we're going to be discussing in today's video. Forex orders, what they are used for, and how you can use them to your advantage. Stick to the end of this video if you'd like to learn more. Hey, it's Chidalu here. If you're a new subscriber, welcome to my channel. If you're a returning subscriber, welcome back to my channel. So before we get carried away by today's video, please give this video a thumbs up, hit the subscription button, and share this video to as many people as possible who you feel would need this sort of information. So let's get right on to it. Forex orders. What are Forex orders, right? They are simply instructions you are giving to your broker to carry out an instruction, carry out an activity, whether or not you are online, all right, or whether or not you are available to be in the market actively, all right. So there are many types of Forex orders in your favorite trade execution app, like MT5, MT4, so on and so forth. Okay, there are many others, but these are the ones that you would really use over the course of your Forex trading journey. So which is why I'll be focusing on them today. So we have types of Forex orders. We have market execution. You can either buy or sell with instant market execution. You can set a limit order. You can set a stop order. You can set a stop loss order. You can set a take profit order. So there are actually two types, right? There are orders for entry and there are orders for exits. Okay, we'll start with the market execution, right? You can buy and sell. That's why buy and sell is in bracket there. Then we have the limit orders and we have the stop orders. I'll be telling you how to use each and every one of them. First and foremost, market orders, right? Market execution. This is an order to your broker to buy or sell a particular pair, a particular currency pair, a particular asset, a particular instrument, whatever it is you trade, at the current market price that you are seeing in a particular trade, right? So whatever the price is, you want to get in at that price no matter what. This is an order to your broker to put you into that market. You want to benefit from either the buy or the sell, whatever movement that is going on at the moment in that particular asset or currency or whatever it is, right? No matter the condition, you want to get into the market, right? So there are pros and cons of market execution. Number one, the pro is that you get to enter at the market price that you are seeing, all right? Then the con is that especially in a very volatile market, you may experience what we call slippage from broker, especially, like I said, especially in a very, very, very volatile market condition, like high impact news. High impact news like FOMC, non-farm payroll, CPI, and all of that, all right? So those kind of high impact news makes the market moves extremely fast, and you may encounter slippage. That is if you trade news in the first place, right? So that is it. Then another type of market order, right? You can see that on your trade execution app is limit order. You have the buy limit and we have the sell limit. They're basically opposite each other, right? So maybe after I've explained buy limit, before I even explain the sell limit, you already get an idea of what sell limit is, because they are complete opposites. So the buy limit is just an order to your broker, an order you give to your broker to buy that pair or buy that asset or buy that instrument at a price below the current market price, right? So your order is below the current market price and you anticipate a reversal at your zone and you want your order to be filled when price comes down to pick you, then rise up. So this is a perfect example of when I want to be using a buy limit order. Let's assume that I finished analyzing the market with whatever strategy that I use, and I think price is going to, from my analysis, I think price is going to buy up from this zone right here. So all I have to do is go over to my trade execution tool and set a buy limit. Now understand that the place where I want um, price to take off from is below the current price. The price is somewhere at 0.89 422. All right. So that is where price is right now. Price hasn't come down to where I feel like it's going to take off from. All right. And I know that maybe by the time price will get to that point, I may not be online, I may be anywhere doing something else with myself, and I won't be available to jump into the trade as at when the trade is still going on. So all I have to do is just go to my trade execution tool and place a buy limit. All right, you can see, like I said, my zone is under the current price, right? So I'm expecting price to come and pick me and continue buying up, right? Let's assume that I have analyzed this market and I feel like price is going to take up from there. So that is exactly what I would be doing. So you can see price coming down. All right, a lot of liquidity here, and then price coming down to pick me. I think I must have been even stopped out in this trade, but essentially that's just the idea. All right, the idea is for you to you can see price just came into that zone and took off from there, continued buying from there. That is assume I have seen that, okay, this market wants to continue buying, but is looking for a very comfortable place to reverse from. And I feel like that is where price is going to reverse. So I just set a limit order. So that's it for the buy order. Pretty simple. It's the exact opposite for the sell limit order, right? Your order is above the current price of the current market price. You anticipate that a reversal will happen at your zone and you want your order to be filled when price comes up to pick you and falls. You are assuming that the price is actually coming down, right? But of course, market doesn't just fall down like that or rise up like that. It gets to point where, it gives little pullbacks and then continues its movement, right? So in a sell limit order, you place a sell limit order where you want price to reverse from is on top, it's above the current market price, right? Where you want price to reverse from is above the current market price. So you're anticipating that price will get to your zone and then reverse from your zone and continue its downward movement. It's pretty simple. Okay, let's check that out in the chart. So for a sell limit order, let's assume that price is selling. I anticipate that price is going to take off, come right to this zone and take off from there. But I know that I may not be around, I may not be available when price is going to get to that zone. In order for me not to miss out on this trade, I just set a sell limit order, meaning that where price is now is below the zone where I want price to reach and take off from. Okay, so it is above the current market price. The current market price is somewhere here, right? But you can see where my zone is because I anticipate that price is going to come back to that zone and take off from there. So which is this. All right, just give it time. While price is doing all of this, I may not be available, I may not be with my phone or my desktop, I may be doing something else that is also important to me. Okay, so because I've set a sell limit order, I can just allow the broker do its thing and take me in on this trade. All right, you can see that price came into that zone and continued selling from there. So back to base, let's move over to the next ones, right? So, but before that, let's talk about the pros and the cons of limit orders. Of course, the pro, you get to set it and go. It gives you freedom, like you have freedom to actually set your trades and not necessarily be on your screen 247 monitoring and following the market all about. You can actually set the limit orders and go over and do what is important, other important things in your life. Trading is not the only thing in your life. And then also you get to choose the exact price that you want to be in the market. You get to choose the exact, but it's not like market execution where in cases of high impact news, slippage can happen and take more than you even anticipate to give or more than you are comfortable giving. Then the cons is that price may snub you. What I mean by price may snub you, that you are not the owner of the market, right? Your father is not the owner of the market. You don't own the market. You're not a market maker. You're not a market mover. So because you have marked a zone and you are expecting that price comes there, is not a guarantee that price will eventually come there and reverse. Okay, so if price doesn't get to that your point, it means that you won't be in that trade, right? You will not be in that trade. If price snubs you, it means you will not be in that. If price doesn't get to your zone and you're not online, you, even if there's another opportunity for you to get into the market, you're not online, so you wouldn't see it. Okay, price may snub you and you will not even be in that trade in total. Then we have another type of Forex entry orders, which is the stop order. The buy stop and the sell stop, again, they are opposites. Okay, buy stop is used when your order is above the current market price. You anticipate a break and continuation through your zone, and you want your order to be filled when the price meets you. The price comes to meet you, just like the athletes do when they exchange the baton from one person to another, right? You want price to come and meet you and then continue in the direction. All right, so for a buy, you want price, your zone is above the market price. You want it to come and meet you from down. That is, if you're using a buy stop, you want price to come and meet you from down and then break out and continue in the direction where it is already going. So you use buy stop order where the market is already buying, right? You use buy or when it is already longing, right? When the market is already buying, you just want it to come and meet you from behind and then continue in the movement. Let us take an example from the charts. So for the buy stop order, I'm letting my broker know that somewhere around here, do not put me in the trade. I'm only comfortable being in this buy position when price has broken this zone. It's a confirmation to me, according to my strategy, whatever strategy that I use, that price wants to continue in that buy direction. Okay, so until price comes maybe somewhere here, 1.2855, right? Until price reaches that level above this zone that I have marked, that is the only place I'm comfortable getting into this buy position. Okay, so I'm only telling my broker, put me in this trade as long as price comes to meet me from behind, and let us continue the buy order. Let's continue the buy movement. Let's continue the buy position. Okay, so in that case, this is where my entry would be, somewhere here. My stop loss would be maybe somewhere beneath this zone to signify that I want to be taking out if it reverses, right? So shortly we are going to talk about take profit and stop loss. So let's see what happens then, right? So until it breaks out, all right, this is where my broker takes me into this trade, right? And the buy movement continues. All right, so that's how buy stop orders work. Let's look at the opposite, which is the sell stop order. This is the exact opposite. Your order is below the current market price. You anticipate that price comes to break and continue through your zone, right? And continue in that sell movement. Price must have been selling already, right? It has not just met you at the level where you want it to meet you. Okay, so again, let's look at the example of a sell stop order and how to use it. So for sell stop, let's say I feel like the market is going to, after breaking out for you, I'm not comfortable putting my sell position anywhere here. So this is the level where I feel like if price breaks, that means price is actually confirming that it is continuing the sell movement. Okay, so that is where I set a sell stop order. Okay, so I put my zone here and I'm giving an order to my broker that once price is here, do not enter as long as price comes to meet this my zone. Put me into this trade so that price will continue selling. Okay, so that's exactly how you use a sell stop limit. All right, the broker will never take you into the market except price comes. You can see that price passed through that zone, right, and it's continued selling. Okay, with a little bit of liquidity here, but then I hope you understand the concept. All right. So price may be up when you're using a sell stop order, right? Your zone will just be below where the market, below the market current price. Okay. And then you want price to continue in that direction and continue selling. Again, the pros and cons of the stop orders are similar to that of the limit orders. If price doesn't meet you, if price doesn't come to that point where you anticipate, it means that you are not in that trade. Okay, so all of these that I have mentioned are just for entries when you want to enter into the market. Orders for you, orders you are giving to your broker for them to put you in the market, right? For them to put you in the trade. Okay, but there are some orders that you can also give to your broker to take you out of the market. Okay, which is the stop loss and the take profit order. They are known as Forex exit orders. So the stop loss order is simply an order to your broker to take you out of the market if price reaches a specific level and price is against you. If price is not going the same direction as what you anticipated in your analysis, you want, if it reaches a certain level, a specific level, you are telling your broker, take me out of the market. I want to cut my losses and I don't want to lose more to the market. So stop loss orders, the pros is that you get to cut your losses and protect your capital. You live to fight another day, all right? But the con is that you might be stopped out prematurely, especially if your stop loss is too tight, and a little error there, forgive it, especially if your stop loss is too tight or price is in extreme consolidation where price is just trying to take people out, take out liquidity left and right. You may be stopped out because of your stop loss. Nevertheless, it is always important, it is always advisable that please, before you even get into a trade, make sure that you have a stop loss. Is going to save you, right? It's going to save you. Make sure, don't it should there shouldn't be a case of you forgetting to put your stop loss. Please always ensure that your stop loss is there as you are placing your trade, as you are placing any of the orders, whether instant market execution, whether buy stop orders or buy limit orders, sell stop, sell limit. As long as you are putting in your trade, as long as you are inputting the parameters of your trade in your trade execution to make sure that you are putting your stop loss, all right, it's going to save you. Of course, yes, one of the cons is that you get to be stopped out prematurely sometimes, or if your stop loss is too tight or market is in extreme consolidation, you may be stopped out prematurely. But then it is still important that you cut your losses. Make it a habit to always put in your stop loss. It's going to save you in the long run. So another type of forex exit order is the take profit. This is where you are satisfied with what the market has given you. Maybe the market has given you a decent 1 to 3 risk to reward, 1 to 4, 1 to 5, 1. You are very happy because the price has gone in your direction the way you anticipated it. But of course, price is not going to continue in one direction for forever. So a time will come that price will start reversing or price will start pulling back. You don't want to make a lot of money and then lose it again to the market. So this is why the take profit, it is important, it is essential that you have a take profit order. Telling your broker, take me out of the market when price has reached a certain level in the direction that I anticipated, in the direction that I set out, right? And I'm okay with the profit that price has given me. Always be content, always be willing to take profit that the market gives to you. I'll make another video about that, right? So don't be greedy. Make sure that you always set your take profit order, right? So by definition, it's just simply an order to your broker to take you out of the market if it reaches a specific level and is in your favor and you are in profit. Okay, that is it. Let's take a look at that stop loss and profit order in the chart. So let's say in this buy position, I want to set my stop loss and my take profit. All I just have to do is to pull up my, it's a guide for me though. Some people trade directly from their back testing tool like Trading View, Trader View, Go Chatting, and others. Some people trade directly from it. Some people go to their trade execution tool to take their trade. But whatever way, your short position tool and your long position tool is made available for you in this back testing tool, and then you can just quickly put that you want to impute these numbers. Now, whether it is a buy position or a sell position, there are three numbers, which is your entry position, your stop loss position, and your take profits position. All right, these are the three numbers that you take from your back testing tool, right, and impute in your trade execution tool and give the order to your broker that put me in this trade if so and so thing happens. So in this buy stop order, let's say I'm using a buy stop order now. This, if you just lay your cursor, in this case the long position tool, I'm only telling my broker that, hey, look at this. All right, if price comes here, okay, so let me take this back a bit. Okay, so I'm basically telling my broker, now see, once price gets to this point of, let me pause that, once price gets to this point of 1 point, I'm reading from here, right, 1.2850, take me on in this trade, put me in this trade, I want to be in this trade. Okay, now while in the trade, if for whatever reason price reverses, right, and comes back to hit my stop loss here, take me out of this trade. I don't want to lose more than I have already lost. Okay, so if price reaches maybe 1.2832, take me out of this trade because that's where my stop loss is, right? Also take me out of this trade if price goes in my favor. If price goes in my favor but price reaches this number, this number is here. Let me pause that, it's beginning to be too fast. So this first place where price hits the end of this my long position tool is at 1.2964. So I'm telling my broker that put me on this trade when price is at 1.28518. Then if price goes against me, take me out of the trade. That's if price hits my stop loss, take me out of this trade at exactly 1.2830. And if price goes in my favor, right, and I make a lot of profit from it, I don't want to stay in the market forever because price can reach at any point, any maybe liquidity zone or any other institutional reference point, and price decides to reverse or pull back. I don't want to be in this trade. Just give me the profit that I have already made and take me out of the trade, whether or not I am online. Okay, so even whether you are setting instant market execution or you have limits orders or stop orders, your take profit and your TP must be there at all times, please. All right, so that you don't end up making profit and then losing the same profit that you have made. It's actually very, very painful. Okay, so I'm only telling my broker, take this is the exact price where you take me in on this trade. This is the exact price you take me out of this trade if it goes against me. This is the exact price, that is take profit, that you take me out of this trade even when the price goes in my favor. Right, so I believe that this is well understood. Maybe on mobile I'll make a video and I'll post it here so that you can know how to actually impute this, whether you are using MT4 or MT5. Right, I believe this video has given you much value. If it has, please give this video a like, subscribe to my channel to encourage this channel, and drop your questions, your suggestions, or how you trade in the comment section. See you in the next one.